Hello and welcome. You're watching Property Hotline with me, Kavita Krishnan. When you buy a home, choosing a home is not merely enough. It involves a lot of other aspects like taxes, like legal issues, and most importantly, home finance. On this show today, we get you experts who will answer all your questions related to financing that dream home. Our guest and expert for the day joins us in our Mumbai studio. With us is Harshil Mehta. He's the CEO of DHFL. Harshil, welcome to the show. We already have Mr. S.S. Verma who's called in. Mr. Verma, welcome to Property Hotline. Tell us what's your question.
Thank you. My question is, whether the EMI that I pay for my housing loan, it should be classified as a saving or it should be classified as an expense. And the question is because once I pay, let's say, 30-40% of my wages as EMI, I hardly have the stamina to make a similar saving. Yet the economists say every person must save a little bit. So how should I treat the EMI?
That's Mr. Verma, you want to know whether you're meeting your savings quota by paying your home loan EMI. Is that right?
Yes, exactly.
Harshil, that's a very interesting question. In fact, now you're often told that the home loan is probably the best loan or the best liability that you can take on. How would you answer Mr. Verma's question?
Mr. Verma, you have basically asked two questions in one. What you do with your EMIs, whether it is an expense or whether it is an savings. Now, so let me also answer it from that perspective. The EMIs which you are paying typically is an expense. However, at the same time, you also need to realize that you are actually saving to build up a future asset for you, and when you build up, save for a future asset, it also means that during the course of the tenure of the loan, there is also you are also paying towards the loan, which means your principal is going down. So the asset creation is happening towards in your favor. And in a situation, in a critical situation, there is always a possibility that you can liquidate it, pay the balance loan. The amount which comes to you is nothing but your saving with perhaps more returns, which otherwise you compared to what you would have put it into a fixed income investments. So, it is a combination of expense and savings combined into one because you are creating an asset for yourself and your family for future.
Right, Mr. Verma. So essentially, you're spending today to create an asset for tomorrow, and the tax deduction doesn't hurt, of course. But Harshil, before we move on from Mr. Verma's question, he brought up a very important issue there. And from a personal finance point of view, how much of your monthly outgo, the EMI that you're paying for your home loan, how much should that actually comprise of your monthly outgo? How much is financially prudent?
See, while it can vary organization to organization, from a financing perspective, I would say, the rule of thumb would be somewhere, that after your net appraised income. Now, in a situation where you have both the spouses working, then you combine the incomes. And when you combine the income, somewhere you will say that, look, on a net appraised income, you would want 50%, to be towards your other expenses, and that's how typically you would go about doing it.
So you can actually pay up to 50% as your home loan EMI.
Absolutely.
Is that prudent?
I would say that would be more or less like in a safe zone, because it then still also builds some buffer of in a situation where you have to draw down
And how much of that buffer should you keep ready? Because typically most experts that we speak to say that, you should have at least 3 months of your home loan EMI saved up in your bank. As a banker, what would you say? How much of your home loan EMI should you actually have with you ready to pay?
Yes, you would want to cover yourself for at least about a quarter, which is, to take care that in an emergency situation, you have so much of liquidity with you till you find alternate solutions or the situation tides away.
Right. So key takeaways for all of you viewers coming over there right at the top of the show: 50% of your salary, that is your total salary, take home salary, both your spouses or just the one earning member, 50% of the salary is what your EMI can constitute, and ideally you should have at least 3 months EMI saved up in the bank for a rainy day. Moving on, we have Ankur, who's also called in. Ankur, tell us what's your question.
Hello.
Yes, Ankur, tell us what's your question.
Can you hear me?
Yes, we can hear you loud and clear.
Yes. I had a query. I had sold my commercial property worth 45 lakhs. And I have a standing home loan of around 36 lakhs in a property located at Ghaziabad. The property is ready for possession, and I'm in a dilemma whether I should keep paying my EMIs and invest my money elsewhere, or should I just get over with the loan part of it? I'm in a dilemma, and I'm a service class employee working in an IT company at a package of 7 lakhs currently.
Ankur, before I take the question to Harshil, can you tell me when you bought this commercial property and after how many years did you sell it?
I bought it around 2007, and after 7-8 years I sold it. I only got a return on it at a rate of say 7 or 8%, I would say, not more than that. And the rental return yield was hardly 3%. So I thought of maybe I should convert it somewhere else. Maybe I should invest in residential or repay my loan or do something better with my money.
Okay. Let me get Harshil in. Harshil, what would you recommend?
Ankur, firstly, let me tell you, I wish a lot of people like you have this kind of dilemmas, that you have surplus money coming in here on account of sale, and then there is also a property which is almost getting completed and you want to pay off your money. Now see, there are two aspects on this entire thing. One is, of course, I'm sure which you are taking care is from a tax perspective. Because you sell a property, there is also a tax angle to that. If you are not going to reinvest in that, which something I'm sure you will take it up with your tax planner. But on this side, if your loan is in earlier stages, then you have to realize that in the earlier part of your loan, you are paying a lot of money towards interest. And that interest, by the way, is also helping you on your tax benefits. The more, because government gives you tax benefits up to 2 lakh rupees. So till such time you want to avail, and especially if you are in a high tax bracket, then this definitely helps you save in terms of your taxes. So depending upon where your loan is, and if you are paying more of interest, then somewhere from a tax perspective, you want to ensure that you perhaps part prepay the loan and then invest the surplus in various other options. There are various options like fixed deposits which are available, which are gives you assured returns and perhaps higher than some of the banks' interest rates, or in other instruments which can protect your principal, at the same time give you decent return. So you have to really weigh it out between the benefits you get out of your tax savings on account of interest payment and deployment of surplus to give you returns.
Harshil, now we just did a tax show yesterday where we were answering tax queries, and one thing that we learned, and what I took away from the show was that where you're paying long-term capital gains tax, it is prudent to actually reinvest the gains, that is a profit that you made from the sale of a property, into a residential property. That way you save on paying long-term capital gains tax. So would you think that it would make, would you recommend that it's probably more sensible for Ankur over here to, whatever profit he's making off the sale, he invests that in paying off his home loan, saves on capital gains tax, and like you said, he could probably take the surplus and put that in, in any other instrument.
That's true. That's why, the first thing I said is, you have to see where, this falls. If you are going to pay hefty taxes, then it always pays that you go back and invest in a property. And yes, you get that property. There is also another option. You can, if it is a complete property, you can rent it out. And you can get rental yields. At the same time, there is also an upside to the extent of the capital appreciation on your property.
Right. So, Ankur, essentially, like Harshil said, you're in a very, very wonderful position. I mean, you're getting money from the sale. You have to reinvest that money. You can pay off. You can prepay a bit of your home loan. You can create another asset. So, it's a great position to be in. So, weigh your options. uh, get advice from your tax consultants, etc., and then make your decision.
It's a great dilemma to
Yeah,
be,
it's a great dilemma to have. Moving on, we have Rajiv Mittal, who's written in. He says that he took a loan of 20 lakh rupees 5 years ago. He's been paying 18,000 rupees as EMI for the last 5 years. He'll be paying the same amount for the next 13 years. So I'm guessing it's a fixed rate home loan that he's taken. He wants to know if it's financially prudent to prepay the loan and invest the money in an SIP. What would you suggest? 5-year-old loan, should he prepay the home loan now?
Well, this is a dilemma for me as a banker, because the moment I say that you start prepaying it, then of course I'm also...
You're an advisor over here, you're not a banker. You should be thinking about that man who's written in with a question for you.
Well, keeping that aside, yes, it is always prudent to part prepay, but it comes again with a rider. You have to check the fine print with your banker or your loan provider, whether there is any prepayment penalty with respect to the prepayments, because in certain, there is always certain organizations...
Okay, hang on. I thought there is no prepayment penalty. I thought RBI does not allow prepayment penalty.
No, I'm coming to that. If it is in a fixed rate of interest, if it's a fixed rate of interest, then there is a prepayment penalty which is applicable. At the same time, many organizations, while there is not a prepayment penalty for full foreclosure, but there is sometimes, penalty if you part prepay in a certain period of time. If in the earlier phase of your loan, if you are making that, there could be a prepayment. So you may want to check those, most important terms and conditions, or your sanction letter or the agreement of the loan provider. Otherwise, yes, it is always good to prepay. Alternatively, there are also options available. Some of the things which you mentioned is investing in SIP or fixed deposits, so that you have the fair balance.
Harshil, what if he does this? What if he, if he approaches his bank and he tells them that he wants to increase the amount of principal that he is prepaying, in the home loan? Because typically in the first couple of years, you're paying more of interest rather than the principal, and there's hardly any principal repayment that's happening. So if he increases the principal amount, that would automatically bring down the tenure of the loan?
Yes, he does have that option. He can go to his lender and say that, look, instead of keeping so much of the tenure, you reduce the tenure by so many years, which means that the EMI will increase. So it can work the other way around, that look, from a 13,000 EMI which I am paying, I want to now pay an EMI of 20,000 rupees, which means that the tenure will get reduced. And as the tenure gets reduced, which means that, he will start repaying his loan faster.
So you are in effect prepaying your loan and you get out of paying the prepayment penalty. Right, let's move on. We have Santosh, who's written in on email. He says that he's bought land near Electronic City, which is only Gram Panchayat approved. Now he needs a home loan for construction on that plot of land. He wants to know if he can get a home loan. Gram Panchayat approved land should be eligible for a home loan?
Santosh, Gram Panchayat is typically, which does not fall within the city limits. So, typically organizations would want to go and fund which are within the city limits, because when you have within the city limits, then there are plan approvals and all those things which come into place. So, you will have a situation where there could be some organizations who would do it, maybe with some other kind of collateral coming in as a security. So, it's something which you will have to actually go out looking whether, organization is going to fund.
But Harshil, this is a very attractive location. Electronic City is one of the hottest property markets not just in Bengaluru, but across the country. And if in a market like that, don't you think that financial institutions would be open to, lending?
See, you are right that our locations are very attractive, but at the same time, it is also the classification of the land. Now, if this land technically, falls outside the city limits and is under Gram Panchayat, then lot of compliances which you see with respect to building permits and constructions and plan approvals may not be applicable here, which means that from a long-term perspective, there is always this risk that tomorrow if the authorities decide to change it, then there is very little you can do about it. So usually, organizations who lend against Gram Panchayat would take a cautious approach and actually would do it on a case-to-case basis.
Now, you also said that they would ask for collateral. So what kind of collaterals do banks typically ask for if they were, open to lending for land like this?
See, in that scenario, the lender what basically needs is another secured, collateral. Now, this could be in form of another property, or it could be also, form of other liquid collateral, or it could also be an assignment of some life insurance policies the borrower may have.
So essentially, the answer is that you need to actually go out and search for people. There would be housing finance companies, there would be banks who would be willing to lend, but you'll need to look for them. So go out in the market and look for people who can lend to you, and then choose basis, of course, the rate of interest and also the kind of collateral that you'll need to furnish when you take that home loan. We have Javed also who's called in. Javed, tell us what's your question.
Kavita, I want to know about reverse mortgage loan.
You want to know about reverse mortgage loan? Okay. Harshil, that's a very interesting question. That's not something that we come across very often. Reverse mortgage loan, I thought that was a product that, was never really took off, though banks have been trying to push it. Could you break it down for Javed and for all our viewers?
Javed, to explain in a very, very simple and a crisp way, reverse mortgage. So as the name itself says, it's a reverse of mortgage, which means that in a mortgage, you pay to buy a house. A reverse mortgage is where you give your house and you get paid in EMIs. Like you take a home loan or a mortgage, you pay EMIs for the next 10 years, 15 years. Similarly, in a reverse mortgage, you give your house to the bank or the housing finance company, and against that, for the next 15 years or so, they give you a monthly EMI. Now, this is very, very prevalent in developed economies, like the US and the Europe and those countries. In India, there are, very few organizations. I mean, DHFL is one of them who introduced reverse mortgages in India, where typically this product is offered to senior citizens, who are above the age of 60. So they actually mortgage their house, and through their life, they get monthly payments. And after they are no more existent, then the house goes back to the lender, who will then liquidate in the market.
The house goes back to the bank or the housing finance company.
Correct.
But tell me something here, Harshil. You are giving, if I give you my house in reverse mortgage, you're going to give me an income, essentially. You're paying me EMI, which will last me through my life. Will I have to pay tax on that EMI?
Now, see, this is an income you are getting. So this is something, again, from a taxing perspective, you will have to see, because you are getting an income which is the money which you are getting in your bank account, and it is not an EMI which you are paying, or there is not an expense, but this is clearly an income which is coming to you. So it is a question of how it is going to be recognized from an income perspective. No,
say I am, like you said, it's something that kicks in after you're 60 years of age. Say I'm not working anymore, I have retired, and this is probably my only source of income. In that case, would I have to pay an income tax on this? Is it taxed?
I'm sure it is taxed, because this is an income which is coming, and because otherwise how would you say that what kind of money is coming in? Because you have given the property and there's money which is coming in, and after 10, 15 or 20 years, when it gets over, the income stream stops, so it is clearly an income which is coming.
So say 10, 15 years later, when it finishes, you're still alive, then what happens? Then you start paying rent to the bank?
No, then basically what happens is after that the property belongs to the lender. So virtually it so happens that then you have to actually vacate the place, or then you will have to find alternatives to buy it back from the lender if you want to continue staying over there.
Right. But the taxation part of it, like you said, is still a little hazy over here, right? And that's probably why the product also hasn't really taken off in that sense. Though, like Harshil said, there are housing finance companies, there are banks that are offering this. So, Javed, if you do want to go in for, a reverse mortgage loan, you should probably just go and figure out what the banks and housing finance companies have to offer you before you take that next step. Before we move on, Harshil, one more question I want to ask you. When a bank or a housing finance company lends to me, gives me a home loan, they give it at a certain rate of interest. Now, does the same rate of interest also apply when I am reverse mortgaging my house?
See, reverse mortgage works on a different mechanism. The first is itself the valuation. And that's where Kavita, to one of the comment which you made about why not taken off is we are a growing economy as compared to a very matured economies. One does not have a handle with respect to how the property prices is going to fan out after 15 years, 20 years. So what happens is you are making an guesstimates that this is what the pricing is going to be.
Okay, you're giving me the banker answer over here. Harshil, tell me this. Is it a fixed rate or a floating rate of interest? And since you as a company do give reverse mortgage loans, what is the rate of interest at which you are, paying those EMIs to the customer who's actually reverse mortgaging their houses with you?
See, these are all done purely on the floating basis, because nobody is going to take interest rate risk for so many years, and the interest rate which gets applied on this is on the lines with what you see for the home loans.
Okay, so it's similar to what we are getting home loans currently. Okay, moving on, we have Alpa Tamane, who's written in through email. She says that her son works as a pilot for Air India, wants to buy a house. His savings are up to 1 crore rupees. How much loan should he take to buy a house in Mumbai? His budget is 2 crore rupees. Harshil, I'm sure you would love to lend to him.
Absolutely, I can issue the sanction letter right away. Well, if the budget is 2 crore rupees, typically from a loan perspective, you can do up to 75% on the LTV. So on that perspective, if he has a savings of 1 crore, he can easily make the down payment and apply for a loan. Now, as far as the loan is concerned, it all depends on the salary and the financials he has with respect to that. But yes, on the face of it, with a 1 crore saving, he can easily buy a 2 crore property and take it from there on.
So, Alpa, that's a humongous amount that his son has actually saved and put together. He can actually go out and buy a house with 1 crore rupees, but if he does want to take a home loan, there are bankers who are willing to lend. And like he said, up to 75% of LTV is what he can get. With that, we come to an end of today's show of Property Hotline. Harshil Mehta, thank you very much for joining us. Hope to see more of you in future. But we'll be back on Friday to answer questions related to buying, selling, or investing in property with another expert. So keep those questions coming in. You know how to reach out to us. You can write in on email, on Facebook, on our website www.mbnow.in. You can also send in video queries to feedback@mbnow.in. You can tweet to me. I would love to hear from you. Or just call in like all the other callers you saw on the show. Keep those questions coming in. Thank you very much for tuning in and keep watching Magicbricks Now.